What's going on this Monday?
Hello, everybody. Thank you very much, Scott. Steve, what's happening over there on your coast?
A lot. There's a lot going on today. And I'll already be ready to talk about it.
Awesome. Okay, well, welcome everybody. Thanks for attending. Today is the 9th of May. Summer is almost upon us. Of course, I think Texas might be confused because it's already over 100 degrees here, so shaping up for a good one. All right, so before we get rolling here, just want to take a brief moment for the legal mumbo jumbo and just want to make sure everybody in attendance is aware of the fact that everything we share with you in this webinar or any of the other ones we have coming at you on a weekly basis is for educational purposes only. So what that means is if you need buy and sell advice on anything, please seek out someone who is legally licensed to dispense that type of information, someone like a registered investment advisor, Series 7 licensed stockbroker, so forth and so on. Always like to take a little bit of time at the top of the hour here to talk about the community that we have fostered around the TI Pro software. And of course, right up here in the upper left, we've got the trading room, which is free to anyone. You don't even necessarily have to be a subscriber of Trade Ideas yet to get in there. But Barry opens the room 30 minutes before every open and does a fantastic job at moderating the trading room. We've got traders from all skill sets in there, beginner, intermediate, and advanced. And once again, it is free. So if you haven't been taking advantage of it, you might want to do that. Of course, every other Monday, you get myself and Steve here for the office hours. Every other Tuesday, you get Steve and Andy Linloff's going to ride shotgun with him for the Trade of the Week webinar. Every other Wednesday, you get our CEO and founder, Dan Merkin, along with Brad Williams in the Q&A demo. And typically, they're going to be giving you a peek at new features that might be in development, so forth and so on. Always fun with those two. Andy's going to round out on every other Thursday with the 5 p.m. Eastern webinars with the Trading Studio, and I ride shotgun with him. And of course, each and every day, Monday through Friday, same bat time, same bat channel, we have our daily support webinar from 12 p.m. to 1 p.m. On the next slide here, you'll see how to get there. Basically, trade-ideas.com/live. That is hosted from our YouTube channel, so the address remains the same. It's a static address, so you can just bookmark it for easy access. But once again, the daily support session every weekday, Monday through Friday, 12 p.m. to 1 p.m. Eastern. Now, it's a great place to get any question answered in real time by one of the trader/trainer people that is manning the mic during that day. So keep that in mind, bookmark it. It's a great resource. As far as getting started, if you're newer to Trade Ideas and you've probably found out, well, it's a big, complex product. Well, makes it a lot less complex if you watch this series of videos here. Everything from beginning 101 to advanced 401. Emphasis on these two right here because it will help you get over the learning curve a lot quicker than not watching TI University. And once again, these videos are all hosted on our YouTube channel. So once you get over to the TI YouTube channel, if you just do a quick search for TI University, you should be able to find these guys, no problem. Start them and stop them at your leisure. All right, here we are at today's agenda. And despite the condition of the market, some pretty good setups today, not only ones that I found using my little technique, but also the AI held up pretty well in this market. Didn't tend to overtrade, had a really good trade in there, had several good trades, but one stood out from all the rest, and we'll be going over that shortly when I do the Holly recap. But in keeping with tradition, I'm gonna hand the mic off to Mr. Gomez here and let him talk about the overall action of the market to get us rolling here. So Steve,
Right.
if you're ready, I'll pass you the baton there.
Let me get the unicorns off my screen. All right.
Yep.
Times like this call for the big guns, and we're going to look at the big guns in the form of weekly candles. Tells the whole picture of kind of where we've come from, where we currently are. Just a quick rehash. This is when everybody realized the lockdowns were coming. This is when everybody and the money managers realized the Fed had their back, and they just bought the 20-week or the 10-week, depending upon what mood the market was in, all the way up as the Fed, injected liquidity into our markets. Well, then that's the story, but the chart really tells the story and gives us better timing on the story. Again, we're in the weeks here. The S&P 500, by way of the SPY, broke down, recovered, and held their 50-week average, but you can tell they had nowhere to go. Just 2 weeks in a row of rejection week wicks right there at the 10 and the 20. That is your warning signal right there. And I think we probably were talking about that, but we were looking at daily perspectives. But in hindsight, it's all clear here. So that was the first major rejection where the moving averages are just patting the candles on the top of the head saying that's nice, but you're not going anywhere. Then we have a confirmation of that over again here, 2 weeks in a row stymied at the curving rolling over 20-week moving average. And then we broke below the 50-week moving average. And essentially, as far as I'm concerned, target one was hit today. And you can see there's a lot of space, okay, in between closing price today and the current moving averages. We don't have a lot of instances like that. So I'm saying we're pretty oversold, and I wouldn't be surprised for a little test of this area tomorrow, which I'm going to call support level 1, maybe on the open tomorrow, and possibly a reversal. Maybe we get a reversal for a couple of weeks. But what's going to happen? Same story, same thing. They're going to bounce right back up into the armpit, right into the pocket there, and the sellers are going to have another chance to prove themselves, just like the buyers did, and the dip buyers and the buy FD dippers all the way up. The game has changed. The board is flipped upside down. We're on the other side of the mountain now. It's a whole different story. So this first orange line, I believe we're either touched it today or we're going to test it again tomorrow. We could have what's called a turnaround Tuesday. Sometimes in the market traders almanac, Tuesdays are a good day to put in some reversals. And again, we sure are oversold. A lot of space between the current price and the nearest moving average. But looking left is what we have to do in these situations. And a weekly candle, we saw some resistance there, resistance. All right, so there was a lot of bunching up here at this current level, which we'll call, 395. That's level number 1. I think what's going to probably happen is there's going to be a little bit of a fight put up here. If there's not a fight, I'll be surprised, and that means that the market's even weaker than I thought. I don't know what's going to happen, but I'm expecting a little bit of a support here on the 395 level, maybe a week or so. But let's see what happens when the price gets back up here, into these levels like we've been seeing the last month or so. Okay, so let's see what happens. We're a bit oversold. I wouldn't be jumping in any shorts. I'm too afraid to jump in and want to buy anything. I'm definitely, I'm 100% in cash. There's really nothing to invest in. It doesn't really matter what sells off. Everything goes with it. Oops, GLD will go with it when the market sells off. SLV was a darling of mine. I've loved that, but I've divorced myself from that position. I divorced myself back here, because that is where it looked like it should have held on, right there, beautiful above the 50, above, and something just broke right here. And I've just noticed every time the stocks sell off, every asset class sells off with it. There's just no safe haven. That's why I chose cash for trade of the week 2 weeks ago. That's why the trade of the week last week and this week hasn't even triggered to the upside. The market just has too much selling in it. So that was the SPY weekly. All right, we got a pretty good example of that. What I think is going to happen is the next level after some consolidation could be tested down here is I'm just going to call it the 350 level, because we look left again, it's a consolidation and resistance, and then it tested as support that day. That's a classic pivot line. So not only that, by that time the 200-week moving average could be coming up. This is a solid downside target. How we get there is, again, my guess is we have some sort of a bounce first and then we test it. And that's kind of how markets behave, and that puts into perspective what we've been talking about. That indeed it looks like a head and shoulders top, and I think we hit our first level of support today. The next one is probably down here around 350. As far as the NASDAQ perspective goes on that, I've drawn the same lines. The first support was hit today. It was even confirmed even earlier over here by support, where before it was resistance. So this is a key level here in the NASDAQ, just below 300. Q's closed at it. We could have a nice reversal today, but probably going to have a lot to deal with right into that armpit. And coincidentally, the next level of support or pivot that I see looking left jives also with the 200-day moving average, so week moving average. So in my mind, it feels like the NASDAQ and the S&P want to visit their 200-week moving average. If we get there, how soon we get there, I don't know. It could be a couple weeks, it could be a couple months, I don't know. But I think that's where I feel like the downside target is. In the meantime, I'm not looking to buy dips. I'm looking to fade the rips, either using inverse ETFs or other things. Actually, I am short one stock. I'm short Pfizer. I'm a little concerned because it is a strong sector, so I'll cut it quickly. But on the daily perspective, I just thought it looked pretty darn weak, tucked under the 200-day moving average. It just can't get above. It's just being pushed. So I thought the Pfizer story is probably kind of over. It's giving up its 200-day moving average. So I am short that stock. So I'm not buying these dips. I'm just looking to sell the rips and make sense of it all. And what I've come away with is we've hit probably one level and we've got another level to go. But in the meantime, it doesn't matter what you're in. All assets get scared at the same time and people just start liquidating them for whatever reason. So that's the environment we find ourselves in, Mr. Jamie.
Indeed it is. Indeed it is. And I was just pulling up the bonds again. They're barely up anything today. So you know, the other day they were
I take it
everything was
back.
down, you
The
know.
one safe haven we do have, look at this ripping chart here. This is called the US dollar. This is the USD against a basket of currencies. It's an ETF called UUP. That's where everybody's going right now. Screw gold, screw silver. Just get me out of the stocks, get me out of equities, get me into the dollar. So make that of what you want.
Well, I guess increasing the money supply by 40% is actually a good thing
In
for
such a
our
short period of
currency.
time, yeah. Dave, I've noticed the SQQ, the Nasdaq's been the weakest, so I've been playing the SQQs on a bounce a lot. That doesn't work, SQQ. So I'll probably look to reload it, reload. Boy, I'm totally frozen over here now. But that's the answer to your question, Dave. SQQ are the ones I've been looking to play around with. I've just been timing those. Let's just take a look real quick here. Yeah, so anything back below 50, I'll probably reset this price alert, somewhere like there. See what happens.
All righty, Steve. Thank you
All
so
right.
much. Let me get the baton back from you. Okay, you should have eyes back on my
Yep.
desktop now.
Mm-hmm.
Okay, so let's go ahead and talk about Holly's performance today, or the AI's performance. 7 signals today, and we can see all of those trades right here. Just keep in mind as we're looking at these numbers, what you're seeing right here on my screen is based around just flat out simple 100 shares per position for all these risk levels, or excuse me, risk modes. So not a bad performance, especially considering market conditions. Now, of course, most of this, whether we're looking at conservative, moderate, or aggressive profit, is coming from one trade, the G8 short. But hey, that's there's nothing wrong with that. It's typically kind of the case with any blotter that you're looking at, whether it was generated with a human or an AI. If it's a profitable day, a lot of the times you have one big winner and some mediocre ones, and that's kind of the situation that we have here today. Interestingly enough, the GH right here is also going to coincide with the previous day's rippers, previous day's dippers, and I've made some slight modifications to that technique, and we'll get over to that here in a moment after we talk about Holly. But you know, seeing the AI hold up in this market environment, good thing. You know, as the market was changing, we were starting to become a bearish tape. The AI was struggling for a few weeks there, but it looks to me like, you know, we've had X amount of days or X amount of data to analyze during these conditions, and finally we're starting to see it hit its stride again. So the GH. Now, what you're going to notice right here, up in the pre-market area right here, we got a little break, and that was on my hot list today as well. So I was already aware of this one, but then to see the AI go ahead and go, you know what, it looks good, I'm going to go ahead and get short. That's a reinforcing factor if you're already in the trade, which is always a nice thing to already be in a trade and then see, hey, the AI is launching a trade on that same stock, and it's got statistical probability behind it. But looking at this entry here, you know, typically I like to cover conservative versus moderate spread. but it is just non-existent today. No big surprise there. We'd be looking for a larger number at the close over here in moderate versus conservative. But as you can see right here, the profit target was taken out just about perfectly, and that's kind of where GH stopped today. When we look over here at the daily, well, not seeing anything there. What about, as Steve was pointing out earlier, the weekly, right? And get that stretched out a little bit. No big surprise to see way back here from 2018, the lower end of this little consolidation right here. So that's where it put the brakes on. It gets much further, we're going to be beyond, well, what we have available on our weekly charts. Let's just verify that real quick and look at the monthly. And we see basically the same thing there. So a lot of charts like this we're seeing lately, 180 down to the current level, quite a peel back. But nonetheless, an excellent trade from Holly today. Knocking out if you held it to the close, which it only made a teeny bit more, about a 16% profit, about 6 points or 600 bucks on 100 shares there. So no conservative, no moderate. Once again, the three factors that we like to talk about typically, which are non-existent today, conservative versus moderate spread, any good trade arounds, those are typically going to be stocks that get stopped out and then hover around the stop area and maybe go the way that the trade was intended, which in this case would have been up, right? TBF, long, came down here to the stop area. The stop area pretty much acted as little intraday resistance, and it just stayed below it and even peeled off further. So just keep that in mind. We don't know what's going to happen tomorrow. Are we going to bounce? Or are we going to hem and haw around and maybe pop that new range that Steve was pointing out? So just be prepared because, you know, we don't know what's going to happen tomorrow. And as who was asking about the ETFs, as Dave was pointing out earlier, and Steve was pointing out, there are a lot of ETFs that run inverse. So if you're not prone to actually shorting stocks or you're trading an IRA account, well, then you can go long in these inverse ETF funds if you want to try to get a little bit of that short money. So not a bad trade in, SPF, another moderate winner here. But once again, no spread between conservative and moderate. The conservative was picking off the exits better than just holding them. And in a market like this, no big surprise. So SPF, SPB, I don't know why I'm trying to say F on that, SPB. What I really liked about this one when I saw it came out is this happens to also be just perfectly coinciding with that little range break for today. And we can see Holly's entry coming right there at 86.92, toes the line for about an hour and then gets another lift. So nice little reward area at the top of that range there. So a moderate little winner there on conservative profit for not quite a point, just a little bit shy. Notice that it's the same strategy that spit out a couple of winners today, even though they're small in these market conditions. Well, that means something. Count de Monet, simply referring to the strategy that spawned them. And typically, these are companies that have cash on hand. So not a bad later day signal. You can see this one only came out maybe an hour and 6 minutes before the close, way over here, but still managed to get a little bit of lift. Would have been nice to have seen it back here as this little consolidation period was being broken, but hey, better late than never. And of course, the 10 period guiding the action most of the day today. Other than that, it's just kind of a mixed bag down here. eBay, not the timeliest exit that we saw Holly make today. Let's see. Actually, I stand corrected. I was getting my columns mixed up there. So once again, 83 bucks or 0.8 of a point in the eBay there. And I stand corrected. Apologies to the AI. That was a choice exit there. Other than that, SJR, another short that did not work. 26.28 being the entry price here, and it just couldn't get below the entry price and just slowly gravitated back up. Never hit the stop, but Holly closed it out in reduce risk mode. So all in all, not too many signals, which I'm always a little bit leery of on a day like today where we get way too many signals, but a nice even trade count, or actually an odd trade count of 7, and just a nice solid performance from the AI. So we will see what it does tomorrow. All right, thank you, Holly. Moving right along, let me get rid of this AI panel down here. And now we're going to talk about the technique that I've been showcasing for several webinars in a row here, which is the previous day's rippers method, simply targeting stocks that were up significantly in the prior session and using the top list to compose a watch list for the next day under the premise that, well, if it was this active today and had a really decent move to the upside, it's probably going to be active the next day. Doesn't necessarily mean it's going to continue, but it's probably worth watching. So previously, up until the beginning of last week, I've been compiling one list from these two top lists over here, negative change from the open and positive change from the open. Now, if you've never heard of this before, keep in mind, we're talking about change from the open, not change from the close. We don't care about what the gap may or may not be. We're simply looking for stocks that opened. Doesn't necessarily mean they couldn't have a gap, but they've made significant moves to the up and the downside in the session from the open. And typically when that happens, you're also going to see increased volume as well. So that's a good thing too. Now, typically what I've been doing is 5 minutes before every close, I'll find the stocks on this list, or they're already there. You don't have to find them. You just highlight them and copy them all. I was piling them into one list, okay? Doesn't matter if it was up or down, I'd pile them into one list, and then I would point these two windows here, which are basically just high-low tickers with the additional pre-market lows and pre-market highs as well. But I've been having more success making two separate lists. So what I'll do now is on the ones that were down the most from the close, those are going to be previous day's dippers. Ones that were up significantly from the open are going to be previous day's rippers. So rippers to the upside, dippers to the downside. And what I've noticed is a couple of different things here. I don't have near as many symbols coming through each window. Makes it easier for me to pull them all up and take a gander at that pre-market range and see if the risk is in place or if the setup is conducive. Secondly, it's going with the trend. And what do I mean by that? Well, if this guy had a big update today, we'll just pull this one up at random. So we had pretty good action from the open. We got 3 consecutive days right now. The trend is clearly up. Over here, it might be and with either one of these data sets, it might be the beginning or it might be in the middle of a run, up 2, 3, 4 days in a row, down 2, 3, 4 days in a row. So it makes a lot more sense. You're looking for a continuation, where it is, let's say for a moment, I took one from this list. Well, let's say we're watching this list for tomorrow, and TNON obviously hits a low. Well, that's more like, uh, or if this one, a stock that had been pummeled 2-3% for 3 days in a row comes through the upside ticker, that's more like trying to pick a bottom or pick a reversal. Same way to the upside, all right? I'd rather go with the trend than try to go, am I picking a bottom here? How does it look on the daily? Obviously, if it's bumping down to support, that's just quite obvious, well, then that might be the case. All I can tell you is that I've had a lot more, it's been an easier process over the prior week. and I've had a little bit more success with the technique. So that's what I'm doing now, is creating two separate lists: previous day's rippers, previous day's dippers. If we go to the low ticker here, you'll see that they're pointed to separate lists now. Previous day's dippers on this one, and over here, it's going to be pointed to previous day's rippers. So a little modification there. If you've been following along and watching these windows, you might want to try this out. Of course, it's a personal preference. I just find it to be a little bit more conducive and easier to keep up with all the symbols. So now let's talk about what the list from Friday yielded today, coming through these alert windows. Um, Quite a few quality short setups, as you can see from this little list right here. Only one decent long setup, which once again, due to market conditions, not that surprising. And I think the ZG, let's just go ahead and knock out that long one first, because I think it was more from an earnings or a price target downgrade. So here we have ZG. And once again, just to recap here, what are we focusing on? You know, when I see DG hitting a high in the regular session, pretty close to the open, what am I referencing as to whether or not I might want to take a pop at it? Okay, because we all know the opening of the market can be quite hairy, especially if you don't know what your risk levels are. You can get run over pretty easily, or you can, you know, be on the other side of that train and get a nice little pop on the open. But more importantly, you know, we have to know what our risk level is, which leads me to another good point. In this market condition, where, you know, the action that we saw today, or take the reverse, it's ripping up, right? Your trading plan really shouldn't change, okay? Your plan is your plan, regardless of market conditions. The setup is still going to be the same. There might be more shorts on a down day like today, but that can quickly change. And there's always, you know, a few stocks going up. It's just whether or not the setup is there. So a lot of people get skittish in a market like this, but keep in mind, your plan never really changes. And this pattern right here that we see, they're here every day, okay? And that's one reason I like this technique, is because it's consistent. These setups are always present. There's just gonna be maybe more or less of shorts on one day and vice versa on the other. So we've got a decent little pre-market range that shaped up right here, clearly definable. And then in that opening 15-minute candle, we get a break above that level right there. That's a pre-market range break, and we can see what it did after that. Now, I think the price target here on ZG, yeah, they lowered their price target from 62 to 41. Now, I don't know why that would cause this if you're lowering a price target, but it shot up to just a buck under that price target and then quickly peeled back off. So, you know, you would have had to have been pretty fast to get this one before it came right back down, but you never really would have been at risk of losing your shirt on this one if you got it somewhere in this candle. But you didn't have much time to exit. So since that was the only one that had any definable pre-market range there on my list today, that's all we got from the long side. But we did have many nice short setups today. So let's take a peek at those. My pointer would work here. Okay, so first on the block, rely, all right? And once again, these tickers, these alert windows will work in the pre-market. So depending on how early you start watching the pre-market, you might see rely down here bouncing around at lows. It gets it on your radar, but you necessarily don't even have to have that, because as soon as the market opens, we break that pre-market range. We see rely coming through. I don't know why my ticker's not populated. I guess I reset it, but we can just pop something in there. We'll let that load up. But nonetheless, nice little tight pre-market range. And right about here, you can't see my blue arrow because that's my brokerage plus tag right there when I sold that thing. And you can see once that range is broken, it was just a nice 1, 2, 3, 4 hour down cycle there. So we got an acceptable risk level in that pre-market range, risk level being the high of that pre-market range, and a nice little reward area here. So even if you didn't peg the bottom, still had plenty of time to make an exit and make something and rely on that short sell. And I've got 1, 2, 3, 4, 5, 6 different examples here, but there were still many, many more out there. So SIDU, once again, setting up with a nice conducive pre-market range here. Opening 15-minute candle, boom, we cracked that thing and just motor down nicely. Of course, you're going to see pretty much a lot of this exact same pattern today. That happens, right? It's just a matter of finding them. We can't get into all of them, but all it takes, just as we saw with the Holly blotter there, is one or two good ones to make your day there. So don't feel like you have to be pressured to hit all of these, because it's literally kind of impossible, because we've only got 2 eyes and 2 arms. But nonetheless, a clean break and just a nice cycle down, acceptable risk area, and a nice juicy reward area. AXSM, and of course, just about everything out there. Now, as soon as I say that, I look at AXSM, didn't even hit normal relative volume, but the majority of stocks out there were doing above 1 on a day like today, and no big surprise. But once again, nice definable pre-market range here. First 15-minute candle. And by the way, these orange arrows, I forgot to point out, I put orange arrows at the opening price of each 15-minute candle. So if we go back to Rely here, we opened at the top of that candle, all right? We didn't hit the break till right there, but that's okay, because we're not going to hear about it till it hits that threshold there and start hitting a new low. So that's what the orange arrow is indicating here. Get back to AXSM here. Once again, that candle open there, and then boom, a break. Little throw in an elbow right there, but not even halfway up to our stop area. And once again, decent risk area and decent reward area. Now this next one, GH, the one that Holly was in, coming through my ticker, right as this candle right here opened. As soon as it opened, boom, it was hitting the tape. Nice little pre-market range, so you could have made a nice entry right here. Not too long after that, you see the AI get short. You're like, hey, I'm already in it from the pre-market range break, and I'm seeing the AI take a position now. So that should be a reinforcing factor if you're already in that play. And then this one just performed like a champ, as that price target from the AI was hit there. DraftKings, boy, this one's also fallen off pretty good. What do we top out there? Almost at 75 in the not too distant past. Down here at 11 bucks. Interesting. Don't know what that says about the gambling industry. Make your own conclusions there. But once again, just a beautiful pre-market range setting up, and the opening tick right here, followed by a penetration of that pre-market range, just like the other one. Throw a little bit of a wiggle, not even getting halfway through our risk area there. And this one's just a little over a 1-to-1. The wick back here on that opening pre-market bar kind of fouled things up, but still a good risk to this reward area. And once again, whether you use wicks or bodies, that's going to be a personal preference when you're marking your charts up like that. So just a ton of good short sells here. Let's see. Last one to take a peek from this strategy is FRGE, Forge Global. Not the prettiest pre-market range, but clearly definable nonetheless. Once again, this guy opening at the top of that 15-minute candle, but it wasn't too long before we take a little header right through that lower opening range break there. And this one performed very nicely, well behaved. And notice on all these plays, well below that 10 period, keeping it tapped down. Everybody had a little push at the close, but all in all, a very clean entry, tight risk, and nice performance from FRGE. So that rounds out all of the plays from the list that was compiled from Friday, and most of those coming from the negative change from the open, or all of them coming from positive change from the open and negative change from the open there. Now, we're going to go ahead and talk about these windows in a little bit further detail when it comes to stock races, because you may or may not already know this, that's how we use races, right? If I right click on any top list, we can launch that real-time stock race, all right? So it's always a good idea to watch the races for these top list too. They were pretty busy today, as you can imagine. But of course, you can tell the system how many cars you want to have in your race. Of course, there's only one because it's post-market, but this is the one, this is the stock race for my Hugging the 10 uh, top list. And if we go in here and check out the settings, I'm going to be dropping some links before we conclude today, and this link is going to be in there. So notice I've got 10 lanes. Of course, you can have more if you want, but all the races I watch, I'm watching 1-minute races so that I get the information sooner. And let me just do this real quick. Because what I want to talk about, and I don't know why I just closed that, I'm going to have to respawn it now, is the Hugging the 10 stock race today gave me an early heads up on BMV, okay? So this list right here, okay? So once again, we launch the race. This is how you might want to set yours up. Put in 10 lanes or 10 cars. I like to have mine on auto rerun because as soon as the 1-minute race is over, it just begins another one and marks off the winner. And we're going to base this one on, since it's positive change from the open, we're going to base it on positive change from the open. And we're going to let the delta value be the sorting factor, okay? So when I drop the links, you'll see these top lists, and if you want to set up the race to the way I watch it, 1-minute races and 10 race lanes. Now, real quick here, let me see if I can get my window that I accidentally closed back up here. And I think I might have misspoke. Hugging the 10 is the one that turned us on to this stock here. Sorry for the little bit of lag here. I don't know why things are experiencing the same thing that you did earlier, Steve. Okay.
You give it the old reset connection.
I guess so.
This is like a CPR move right there. You just hit it, and ideally.
Well, I don't know what's going on here. Try the old symbol switch one more time. Did I leave myself on the dev server? No, I'm on
Or is there
primary.
no such symbol as BMV?
Is my dyslexia kicking in? No,
Got
it's
me.
it's definitely a symbol. Ah, goodness. Okay, well, that kind of makes it hard to show.
Hmm.
Okay, well, that kind of puts the kibosh on that. All right. Okay. Oh, I did have dyslexia.
User error. It's always user error.
BWV. Yeah, I'm like, okay, it can't be our data. Okay. So BWV. And I was doing that all day. I was like, BMW? But anyway, BWV. Okay. So
That's
notice
a bad ticker symbol. I don't like that.
it's weird. It's weird. Okay. So BWV. Okay. What alerted, what caught my attention with BWV right about here today? And that was it was winning 1 minute stock races right off the bat. Okay. In this 1, 2, 3 hour period, it was, it was starting to knock out, or actually when this bar right here, let's see, that's the opening candle right here. So for the first hour, it was kind of flat. Then it started winning race after race after race before it got to that break point. So remember, it's being powered off of a top list. Okay. So it just happened to coincide the hugging the 10 with the 10 period right there, and it did meld. It was popping up on positive change from the open. And what I've done here is I've frozen the top list here at 9:35. So that's an hour and 5 minutes after the open right here. Okay. This candle started right at that time. Now, if you're just watching a top list, if this top list was, it was right here, and you're seeing these numbers fluctuate, it's real easy to miss something because a lot of the times something that's up will pull back and then it'll disappear from the top list, right? The only reason I saw this was because I was watching my hugging the 10 stock race. And then you pull it up, you see it right here, and you're like, ooh, that coincides with the other technique. It's making a nice pre-market range break. And of course, this little guy moved from 435, topping out at what, 643, almost 645. That's a huge move to the upside, especially in the face of this market that we had today. So you never know where these things are going to come from. But this one was spawned from the race when I saw it right here. Just happened to be on positive change from the open at this time. But if you weren't quick, or if it wasn't on there earlier, you're like, oh, okay, checking out the top gainers, what's up the most from the open. They've already, most of those trains had already left the station. But this one was brought to my attention simply because I was watching the Hugging the 10 stock race. So like I said, the Hugging the 10 will be in the list of links that I drop here before we conclude. But just another way that I've found, of course, stock racing takes a little bit of time for you to acclimate. You're like, well, it's just telling me the same thing that this list is telling me. Well, yes and no. You're going to be getting, a lot more granular when you're watching, oops, the stock race, and then, you might notice some correlations. But this is the thing that got my attention today was the hugging the 10. So hopefully that's not too confusing. If I need to go back over that, just let me know. But the hugging the 10 stock race showed me
Recording will
this
be up
today.
tomorrow.
Mhm. Okay, so let's take a peek here. We got through this. We got through this. Talked about the modifications that I've made to the previous day's rippers, separating them from previous day's rippers and previous day's dippers. Correlation with that hugging the 10 stock race. And we're just about out of time here. So any questions from anybody out there before Scott walks us out and lets all you guys know how you might be able to save a little bit of money on a new sub or maybe an upgrade if you're already a subscriber. All right, don't see any questions popping in there. What was that symbol again, Steve, on the dollar?
UUP.
Yep. So looking at
I'd
this
buy that
chart,
chart.
they're like, what money printing? Hold on, I was trying to pull the monthly over here. And yeah, who'd have thunk it? Money printing is good, make money go up.
Market will
All right,
confuse
Travis.
most of the people most of the time.
That is true. That is true. That's why Trade Ideas was invented, to help try to take that confusion away. All right, ladies and gentlemen, thanks for attending. Scott, if you're ready to walk us on out, we're ready for you, sir.
Yeah, thank you. Just a couple items as we head out. Grab the Strategy Indicators ebook. It's one of the more recent ones, and it's very popular. Just go to tradeideas.com/strategy and grab that. It's got some of our Director of Software Development's favorite things to do. We do have an ebook coming, a test drive coming up starting next Monday. Next one, yeah. So find out all about that at trade-ideas.com/test drive. If you sign up and pay a little bit, there is a small charge. It pays for the exchange fees to get real-time data and all the other improvements while you test drive Trade Ideas. You get to try all the premium features for 2 full weeks. I just go to trade-ideas.com/test drive and sign up for that, and we'll send you follow-up info about the start time. And it starts on Monday, May 16th, and there's going to be some special education provided for everyone. You get to try out all those premium goodies. Interactive brokerage lets you trade directly from Brokerage Plus within Trade Ideas. You can manage your portfolio, execute trades, use their great, reliable platform. Just go to trade-ideas.com/IBKR to learn how to become an interactive brokerage customer. Stock racing is something we've recently added. I know you've probably seen some of that. If you have been attending any of our recent webinars or watching the YouTube channel, trade-ideas.com/stockrace is where to go to get details on that. Just like interactive brokerage, E-Trade lets you trade directly and manage your portfolio from within Trade Ideas using the Brokerage Plus platform. The difference there is E-Trade lets you trade with a $0 commission trading experience. So to learn about that, go to trade-ideas.com/E-Trade. And if you decide you want to start a new subscription or upgrade today, just use the code SPRINGISHERE when checking out and do an upgrade or sign up for a Trade Ideas account. Any questions at all, email us info@tradeideas.com. You can find Steve Gomez on the TikToks. If you look for, we don't have them on this slide yet, but if you look for Today Trader on TikTok, you can find what he's posting. You can also find reposts of that on facebook.com/TradeIdeasPro. And of course, our YouTube channel is Trade Ideas. Steve Gomez is TI Steve G, and Jamie is QuantBot. So thanks everyone. The recording of the session will be up later on tonight or tomorrow. Stay tuned for an email tomorrow about how to find it. And thanks everyone. Have a nice rest of your afternoon.
Thanks, everybody. We'll see you on the flip side. Bye-bye.